We are now jumping into question. Yes, 2022. Why am I struggling to say it? I think I'm not even so many places, right? So I didn't do this because, guys, I'm expecting by now you guys should be comfortable with this. Does that make sense? When you see that calculations, let's see how many marks were here. 20 marks. Yes. 2022. In fact, we'll pass it around. Okay. Okay. You know what? I think, yeah. Just get your sit down here and pass it on because I don't want anyone getting disturbed. Cool, guys. Can we rock and roll? So this is actually a golden opportunity for you guys to see our formula in action, right? So let's go back. What we want divided by what we have times, let me zoom out a bit, times what we have random amount. So to get the VAT amount, okay, now let's just, before I go further, remember the VAT amount is 15%. You guys recall this? Then there's the VAT exclusive, and that is always 100%. Okay, and then we have the VAT inclusive, which is 115%. Let me just double check. I don't know why I'm always insecure about whether I'm recording or not. All right. Let me close this here. So now, guys, all that we now need to do, let me stamp this as well. Come on, there we go. All we now need to do is then calculate here. Fast. What is our VAT amount? What is our VAT inclusive? Okay, so I'm going to do the first row with you. So here we want the VAT amount. We can start there. So what we want, and maybe, yeah, no, it's fine. What we want is the VAT amount, which we know is 15. What we have, however, is the VAT exclusive. So we put 100. Can you see? Because there we know VAT exclusive is 100. Is it making sense? Let me say times what we have random amount, which is 20,000. And what do we get? Somebody tell me? 3,000. 3,000. 3,000. Okay. And then there, if you want to be fast, you can just say, I know my VAT inclusive is my VAT amount plus my VAT inclusive. Sorry, exclusive. My VAT inclusive is my VAT exclusive plus my VAT amount, which then obviously gives you 23,000. Okay, now they've switched it up on us a little bit there. They switched it up on us a little bit. Now they've given us the VAT amount. What do we want to start with? Do we want to start with the VAT inclusive or do we want to start with the VAT exclusive? Exclusive, okay? So we say VAT exclusive is 100. That amount is 15. That's what we have times what we have, which is the 37,500. Somebody tell me, what is our VAT exclusive? 250,000. That's it. Okay. And then you add those two together, what do we get to get our VAT inclusive? 287, yes. 500. Guys, do I need to go through the rest of this? We're happy, right? Okay. Then here, guys, you need to know your VAT categories. One way or another, we are testing you on this. Okay, I wanted to ask you guys this. That's why I was hiding and I had this table. But in the interest of time, because I want to get to the meat, the more difficult thing. So there, milk is 0 rate. Remember vegetables, carrots, fruit, milk, brown bread, it's 0 rated. Why? Because we don't want to make these goods expensive. Because remember, everybody must be able to afford the basics. Does that make sense? Everybody must be able to afford brown bread, to afford milk. Okay, so if we start putting that on it, adding tax on it, the least privileged might suffer. And that's what they want to avoid. Okay. Chocolate. Buying chocolate. It's good life. No, we don't need chocolate to survive, right? Standard rated. Petrol, 0 rated. H, we're already suffering. Okay. Interest received. Interest, whether it's interest received or interest charged, it's exempt. You never get that on interest. Never, never, never. Okay? Club fees, right? Non allowable. Wherever you see for staff, staff lunches, sugar for staff, microwave, kettle for staff, wherever you see for staff, you know it's not allowed, not allowed. Okay. So this you should know. Now, in question 2.3, they ask you there, they say, what are the two bases on which a company can report its tax? You have it, invoice or cash basis. Those are the two bases. Then they go on further to ask you, there's a business with a 3 million turnover, which basis would be the most ideal for you? Which one? Invoice. Why? You're right, but why? Yes? %. So in fact, I will actually use the word you don't have to use the invoice if you don't exceed the turnover of 25. You don't have to. You can go the cash. You can go the invoice. It's fine. But if you exceed, then yes, it's recommended you definitely use the invoice basis. Make sense? Sharp. All right. So I didn't add that in there as well. Let's proceed. Let's proceed. So here again, guys, accounting equation. The last question we did, they didn't have accounting equation. This is shocking. It's very different from what typically happens. Typically, you have an accounting equation. Now, that accounting equation, there's only two ways. It'll either be on the periodic or the perpetual. Usually what they do, they say, since we asked the accounting equation on the perpetual, we're going to ask the journals on the periodic. Does that make sense? Or vice versa. We'll ask this on the periodic, the accounting equation on the periodic, then we'll ask the journals on the perpetual. Okay. Which is why I went through learning unit 6, those different phases to show you the difference between periodic and perpetual in the journals. Because remember, cost of sales falls away under the periodic. All right? So take note of that.
So,
you want to ask?
yeah. Would you say it's fair to say that we might not get it in the exam because it was in our test? Accounting credit.
It's possible. It's possible. That's why I'm saying for them to exclude it in 2021 was a shocker, because if you look at the papers before that, it's always. But it's very possible because they did ask us. But they also like to ask us because it's like, let's give them, something we know they can typically handle. So I mean, if they throw this out, if they throw that out, it's a difficult paper you get that. How many marks were here? This is either 25 or 35, 30, 20. Okay. I think that's fair. Okay, so I'm just going to go through, you can see the answers already there. We're just going to be explaining what is going on. So, okay, you guys have seen accounting equations, you can read through it. They give you an example, guys. Pay attention to the example when you go to a question like this, because that's how the memo is structured, and that's how we're going to be marking you. You can do the right things, but if it's not according to what we want to see, how are we going to give you marks? Does that make sense? So please, make sure you understand it. So here they said ignore that. Ish. I also do not follow instructions. This is bad. Okay. All right. Owner contributes cash 200,000. So that's obviously going to affect your bank and your capital. Okay. Obviously, plus 200,000 for bank. All right. Because bank is an asset and it's increasing. Guys, make sure you get the pluses and the minuses correct. And then owner's equity is obviously affected by the capital. No rocket science there. Second, on the fourth, it says purchased goods for cash 10,000 and receive a trade discount of 5%. Now, can you see? It was for cash and they said trade discount. If you look, can you see a 10,000 anyway? There's no 10,000. Why? Because the trade discount, we're only concerned with what we actually are paying, or are paying, sorry. Okay? So obviously here, bank, and since this is for trading inventory, okay, that's also affected. Okay, so maybe it's good that we're doing it with the VAT, because they could also ask you with that. Okay, if it was with that, they probably would also give you more marks. Because you have to think, is there input VAT on this transaction, or is there output VAT? Or is that not even applicable? Okay. So in this case, since we're buying inventory, we know that inventory is part of our inputs, so it's going to be input VAT. Okay, so first things first, bank is decreasing, that's why there's a negative 9,500. Then, obviously, your trading inventory is increasing, and that's increasing by 8,261. And then input VAT is also increasing your assets. Remember, we said input VAT is a current what? Can you see that now? Okay, right, and there we go. Yes. Yes. You will be doing this. No, we would then say it increases by 9,500. Yeah. Because that is the full cost of the inventory trust, because there's no input tax. So that whole 9,500. Very good question. Very good question. Okay. Next one. On the 6th, sold goods with a cost price of 1,000. We sold goods with a cost price. Can you see what they're doing to us? They're giving us the cost price. They're not giving us the actual selling price. All right, on credit. Okay, so I forgot to actually mention this, but let me quickly do the model here. C plus P is equals to SP. And what was the markup they gave? If you check it, 20%. And did they say on selling price or on cost? On selling price. So what is selling price? 100. And then this is obviously 80. Oh goodness. What is going on now? What is happening? It depends who you ask. Oh, you guys are talking to yourselves over there. Okay, so then at this juncture, we know that this transaction is not complete. So you know that since we sold on credit, obviously debtors control is affected, not your bank. Okay, so and then sales is always affected, whether it's for cash or on credit. Okay, so that double entry is fine. But now we have to work out what is the selling price, and we use that. We use the model. Okay, they gave us the cost. So they said the cost of these goods was 1,000. Let me start here. Let me actually start with the, actually, what? Why is it erasing? Okay, there we go. What we want is the selling price, which is 100. What we have is the cost price, which is 80, times what we have rand amount, which is 1,000. 1,000 rand. And that will give you how much? Okay, so that's where the 1,250 is coming. Happiness is coming from. So then debtors is increasing our assets by 1,250. Okay. Then sales. Remember sales. We're saying what is their revenue coming to us? We're not interested in the output VAT because the output VAT belongs to SARS. Okay. Again, in this question, you would have just said 1,250 here because why? They said ignore that. Okay. So output VAT. If they did say, consider that, then you would have put output VAT here, and we know it's a current liability. Now, this is why I was saying this transaction is incomplete, because remember, are we on the perpetual periodic inventory system here? Perpetual. So what do we need to do now? 100%. Okay. So what's happening with trading inventories? Is it increasing or decreasing? So what do we need to do to it? Debit or credit? We need to credit. Okay, so here, trading, inventory. Okay, and we said cost of sales is an expense, or we didn't say it, I'm telling you. Cost of sales is an expense. And what are we doing there? When we incur an expense, we know that we debit it. Okay, right. And then here they told us the cost was 1,000. So assets is decreasing by 1,000 for trading inventory. Cost of sales is going to negatively affect owner's equity. There we go. Now that transaction is done. Okay, and here, no, we wouldn't have calculated the input back here. Because we would have calculated input back when we bought the inventory over here. Does that make sense? Now we're reporting the fact that we had less inventory and that we have obviously incurred costs. We weren't reporting the input back. Yeah. It's good we did it this way. Or maybe I'm just trying to make myself feel better. I'm not following instructions. Okay, let's go on. What's the next transaction? Paid 300 cash for an advert for the local newspaper. Okay, this is straightforward. Cash, so bank is affected. Wherever we see cash, check, EFT, we know bank is affected. Okay, bank negatively affected is decreasing, we're crediting. Advertising and expense, we're debiting. And then obviously there's input that you can claim on advertising. It is standard rating. And there we go. Okay, that shouldn't be too hard. Advertising obviously negatively affecting owner's equity. Bank is an asset, it's decreasing. And then input value is obviously an asset, and that is increasing. Everybody happy so far? No? Yes? Yeah. Yeah. 1.2 for what? Oh, yes, guys. It should be 1.2 for this. Ne? Yeah. Because 20% of 1,000. Guys, what's happening? Are you guys calculating this stuff? Yeah, it should be 1.2. Should be 1.2. So then what is, it is 1.250. 20% of 1,000. Okay. You're saying this is 1.250. How many say it's 1.250? Guys, I'm trusting you. I'm not even going to calculate. It's right. So put 100, then divide by 80. What do you get? Oh, why are we saying that? Okay, so it goes back to our formula. Remember, we have that formula. What we want divided by what we have times what we have random amount. You remember that formula? So now we're asking ourselves, what do we want? We want the selling price. We want this one, which is 100. And can you see? We put it up top. Can you now see the consistency? What we want is 100, which is the selling price. But what do we have? We have the cost price. That 1,000 rand, it says we sold 1,000. What? We sold 1,000 worth of goods at the cost price. It says I forgot what the exact wording is, but it's letting us know that 1,000 is the cost price. But they say we sold goods at 1,000 rand cost price. Something like that?
With the cost price of 1,000.
Thank you.
So far.
Right. So hard. So hard. Okay, but you get the point, right? We have our cost. So therefore, this is where this 80 is coming from. And then what do we have random on? Which is the one column. Make sense? Aha. Which gives you what? Which gives you 1.2. Which gives you 200. It gives you 20%. So, look, I can't vouch for the different methods. I really can't vouch for the different methods. I really can't vouch for this. If you go another method, because I can only impart to you the method that is easiest for me and the one that I've seen is easiest for me. Why did you? Huh? Yeah, I'll put it together with calculators. I mean, if I have to calculate myself. No, come on now. I'm just look. No, don't do that. I'm trying to help my students. Not about you guys. It isn't. I trust you guys. Don't worry. Yeah. Yeah, so, I'm just curious why. Remember what you said 20 over 100, right? You're not supposed to do that. Let me show you what you're supposed to do. And by taking 20% and putting it up top, you are calculating for what? What is 20% over there? It's the profit. Can you see that? So you are saying, what do I want? I want the profit. But what do you have? You don't have the selling price. You have the cost. So you should have gone 20 over 80. Is it making sense now? 20 over 80 times 1,000, what do you get? So 50 now plus your cost will give you your selling price, which is 1,250. Okay. So whichever method you use, I know you also use a different way when it comes to the discounting. Make sure you got it on lock. Does it make sense? Because I'll never tell you guys use my method. I say use the method that works best for you. Because at the end of the day, what do I want to ensure? I want to see it. At least for this one. Actually, why are you taking everything personally? What's going on here? All right, cool. So that's fine. Then I think we're on the last transaction. The owner took goods for personal use. The selling price. Can you see? This is how they're tricking you guys out. Do you know what do we record drawings on? On cost price, but then here they're giving us selling price. These guys have a problem. They must just give us the right information, right? So now we have to use markup again. We need to calculate what is the cost price of these goods. Okay? So how do we do it? Somebody help me. What we have is the selling price, right? So in other words, what we have is 100%. But what we want is this cost, because we're recording drawings. So what we want is 80. What we have is 100 times. What do we have random amount? 500. And does that give you 400? Okay, and we know drawings negatively affects always equity, reduces. Okay? Then obviously trading inventory, we know it's exclusive of VAT. Okay, but drawings is not exclusive of VAT. Okay, so that's why that, but again, for you guys it would just be negative 400 because they said ignore that. Okay, then output VAT. In fact, also in the example, they should not have included that if they said ignore that as well, because that just confuses people. Okay, but anyway, output VAT, boom, there you go. Because obviously we're reversing what? The input VAT. Remember when we bought these goods, we told SARS, hey, we are selling this inventory. So we want now to claim input VAT when we bought the inventory. So now we're reversing that. Okay, anyway, spend too much time on this anyway. So here, if you go to the journals, now you saw in 2021, they asked us about what you call it, cash payments journal. They asked us for the creditors journal. They asked us for the creditors allowance journal, and then they asked us for the general journal. That was 2021. 2022, they asked us for the cash receipts journal. They asked us for the debtors journal. They asked us for the debtors allowance journal. And do they ask us for the general journal? They don't. Do they? Oh, they do. They do. Okay. So again, guys, I don't think we'll have time to go through this. Yeah, it's 11:39. Wow.
So let's do the debtors allowance.
Okay.
Because that's straightforward.
Yeah, but again, all I wanted to say is again, you can see, if you look at my paper, I have gone and read through and just using the source document, I've labeled which journal is supposed to.
Okay, let's do that.
No, you guys. Okay, yeah, okay, let's do this because I feel this is, if you can get this right, this, as long as you know how to apply your math and do your calculations, okay, right, and you guys can obviously just take pictures of this and then just see how it was recorded in yours. Okay, so it's the same principles. We're dealing with perpetual inventory system. Yes, yes we are. No, we're not. It's periodic, yes. And can you see, because it's periodic, there's no cost of sales, although we're doing the cash receipts. There's no cost of sales. Okay? Right. Even in the debtors journal, there's no cost of sales. And also in the debtors allowance, no cost of sales. Okay? If they ask you to do the creditors journal, cash payments journal, creditors allowance journal, on the periodic inventory system, you will not have a trading inventory column. You will have a purchases column.
Yep.
Okay? Right. So just remember that. Okay? Okay, so we look at this. They tell us that we have source documents, duplicate invoice, which stands for DIN, duplicate credit note, which is DCN, cash receipts, which is CN, electronic transfer confirmation slip, which is EFTCS, and then obviously balance statement, which is BS, and journal vouchers, which is JV. Okay, so again, number one, DIV, debtors journal. Number two, DCA, duplicate credit note, which is then debtors allowance journal. Next one, CR, which is then going to go to your cash, because what? It is cash sales, and then they wrote CR. Again, CR, cash returns, cash receipts journal. Next one, DIN, debtors journal. Next one, CR, cash receipts journal. Next one, cash receipts journal because of the CR. Next one also, then they put BS, okay, for bank statement. However, we don't know how is the bank being affected by this transaction, right? We have to then read the details to say interest received, because it could also be interest paid. Does that make sense? So that's why we have to read to see, okay, what is happening in our bank account? When we now see interest received, it means we are receiving money. So they should go away. Cash receipts journal, 100%. Next one, DCN. Where is that going? Debtors allowance journal. Next one, CR. Where is that going? Cash receipts. JV. General journal. EFT. CS. Okay, we don't know now. Is it an EFT where we're paying someone? Or is it an EFT where we're receiving money? We don't know. So we now need to read. Drawings by owner. Okay. What's the effect on this? Are we getting money or losing money? We're losing money. So which journal should we go to? CRJ? CBJ? Are we doing the CBJ? I told you guys they're gonna throw in things. You don't even need to. So you can even just scribble over this thing because you don't need to see this transaction. Anyway. Next one. Again, they give us BS. Loan received from bank. Okay. Where is this going? Are you sure? Why? Why? I'm going to say we should go to the CRJ. You're voting for something here. You know me. We will do this until. How many of you say it should go to the CRJ? You look like you're so check. How many of you are saying it should go? You don't know where it should go, but it should go somewhere. It's going to the CRJ. Whenever we receive, even if it's a donation, CRJ. Whenever we receive money, okay? CRJ. Okay, right. Again, here they actually say totals are not required. So take note of that. Okay, guys, I'm not gonna go through any of these, okay? But this should. All you need to remember is where are we saying that? Is where it's, which columns are VAT inclusive, which columns are VAT amount, which columns are VAT exclusive. That's what you need to remember. Okay, do you need me to scroll up to the first one? Did you get it already? Okay, there you go. This one, it was a credit loss. You now need to remember. Credit loss is an expense. Bad debts, credit loss, same thing. Okay, so we know expenses, we debit. We get input VAT. Because remember, when we sold these goods, we said, SARS, we owe you output VAT because we just made a sale. But now, guess what? This person gets liquidated, sequestrated, is insolvent. They're not going to pay us. So we need to reverse that input VAT. How do we do it? Sorry, output VAT. How do we do it? With the input VAT. And obviously, your debtors control is decreasing. Okay, that was your question 4. Your journals. Here they ask you to do the individual debtors. Okay, we went through this, so same principle. I'm just going to do this for my viewers on YouTube. Okay. Remember, both of these are debtors, right? Both of these are debtors. So increasing on the debit side, decreasing on the credit side. Balance. You can't have problems with balance. Balance is plus, minus job. We know how to add, we know how to subtract. Okay. But we need to know our source documents. I don't know how they asked this one. Let's just double check. They asked us, did they ask us, it says again, note, in doc number column in the answer booklet, provide the correct name of the document. Okay, so again, the same thing they did in 2021, they're now saying, make sure you know what transaction will result in us having a credit invoice. What transaction will result in us having a receipt. Okay, folio, again, you must know which ones are affected. Okay. Yeah. CRJ. Are you guys going to share this on the group?
Nope. Nope.
It's your choice. You came today, so it's fine.
I know I won't.
And again, if you look at the under the required, it says round to the nearest rand. Okay. All right. So that was question 5. Now we come to question 6. Can you see how they're asking this one? Let's go to the required. Guys, are you with me? We're finishing now. We only have 10 minutes. Complete the salaries journal for June 2021 by completing the missing amounts. So here they're giving you the salaries journal. Guys, this is the same question that they gave you in 2021. The only difference is in 2021, you're now filling out the whole column, but here they're just saying, okay, just fill out specific items. Can you see the different way they can ask you the same thing? Okay. What else are they saying? In your answer booklet, write down the answer and applicable working next to the corresponding. Guys, if they're asking for working, give them working. Why? Because there's marks. Somewhere. Now, here's the thing. If I'm marking for you, if you give me the right amount, I'll give you the full marks. Because somewhere, somehow, whether you did it in your head or you did it on your calculator, you must have done your workings to get to the amount. Here's the flip side of that. if you get it wrong, I can't give you anything. Yes, you get this nice egg. Because I don't see any workings, I don't know what formula, what method, what you are trying to do. Does that make sense? So please provide your workings. You're not as excited as you were before. Okay. All right. So that's the first bit. That's all you needed to do, guys. It's salaries and wages. I'm sure you'll figure that one out. In fact, salaries is easier than wages. Just by the way, salaries is easier. It's more straightforward. Does that make sense? Guess what they asked in 6.2? Post the June salaries journal to the EMP control account. Include the payment to SARS and show all your workings. This is the same thing they asked in 2021. This is the same thing. In fact, in 6.1, the other thing that they're testing is your understanding of the structure of the salaries journal. Because we know we need to understand that there's the employee deductions and then there's obviously the employer contributions. Guys, one class, please. Okay. So they're also testing your understanding of the structure of that thing. Okay. Here, guys, again, which three items did we say are in the EMP 201 control? UIF, yes. STF, tax, PAYE. That's it. And remember, with UIF, you have the contribution and the deduction. With SDL, we only have the contribution from the employer. With PAYE, we only have the deduction from the employee. They don't contribute to our taxes. And there you have it. And there you can see, I've also shown my workings. Okay? So there you have it. It's exactly the same as before. Just different amounts. And how many marks did they give us there? For question 6?
20.
Okay.
8 for this question.
Yeah. And then my favorite bit. My favorite bit. Guys, I'm going to show you. No, I'm not going to show you. I'm going to actually just write it down a bit better. But remember, there's that slide that I told you, post on the group. Let's recap that before I show you the answers to question 7. Question 7, all that they're asking, if you look at the required, they say journalize all the relevant closing transfers. Journalize. They could also say record in the general ledger, but here they've asked to journalize it. Simple. All you need to know is the process. Whatever question they give you in Unit 9, then you need to know the process. That's all. What's step number 1? Number 1, sales returns gets closed off to where? To the sales. And then what's step number 2? Sales to the, is it cost of sales? To the trading account, yes. That temporary account, our first temporary account, isn't it? Then step number 3. To the trading account. Then step number 4. Profit and loss. Then step number 5. Let's do this. Yes, number 5. Nominal section. Yes. I'm just going to call it nominal sec. To where? Profit and loss. Our second temporary account. Is it? Then what next? We're not yet there. To capital. Now, what's the next step? Drawings to capital. Is there another step? Is there anything else? That's it. Those 7 steps. You understand those 7 steps? You have got how many marks? 25. I think you can get this for also 30 marks. You might get it for 35, but I don't get more than 35. But usually 30, 25, 30, 25, 30, 25. Now, they said they need us to do this in the general journal. So you just come here and you follow the steps. You look for the total and sales returns. Let me zoom in here. You look for sales returns. You say, since I'm closing off this account, in other words, I want to bring my sales returns to 0. Sales returns is what type of account? If sales is an income, sales returns has to be the opposite. What's the opposite of income? It's an expense. So if I'm closing off an expense, what must happen to it? Closing off the whole year I've been debiting. Because whenever I incur an expense, we debit. We have to. You see what we do with sales returns? We credit it. And then that means that whatever account we're closing off sales returns to then needs to be what? Debited. Because remember, double entry, right? So then sales is then now debited. Okay? That means that sales is actually decreasing. Because we know that sales increases on the credit side. Okay. All right. So that's step number 1. Step number 2, we now know we're closing off sales to the trading account. Guys, I want you to see this. This is the process. That's step number 1. Step number 2, sales to the trading account. But now we have a new balance on sales because we closed off sales returns to the sales account. Right? Sales returns obviously had a negative effect on the actual sales amount. Because when somebody, I told you earlier that I sell books, I'm juta. So if somebody returns a book, that's going to reduce my sales revenue, right? So that's what sales returns is. It's reducing our revenue. So that's why you see 480 is getting reduced by 18,000. So that's our new sales balance. And why are we debiting? Oh, yes. From the sales return. No, we also work with drawings, which is in the balance sheet section. We also work with capital, which is in the balance sheet section. So it's a question of what are we actually doing and which stage are we? Does that make sense? Also, if they ask you to do the post-closing trial balance, then we're definitely making use of the trial balance, the balance sheet section, because we include the balance sheet section, but we exclude the nominal section. Remember, all the nominal accounts get closed off, so they are 0. So we don't even include any of them. Make sense? Okay. Those of you who were in my class when we did this, remember what I said? I love when they ask you to do the post-closure because it's the best test to see. Do you understand this thing through and through? Okay. Anyway, let's go on. Next step, step number 3, we said was closing off cost of sales to the trading account. That's what we're doing. Cost of sales we know is an expense. We've been debiting the whole year. To close it off, to bring it to 0. That's what we're talking about when you say closing off. We now need to credit that by the amount in the trial balance or by its total at the end of the year. Because this year procedure is what we're doing, isn't it? So obviously the account we are closing it off to will then be debited, which is the trading account. I'm trying to explain the logic, how you need to be approaching this thing. When you're doing it in the T accounts, it's easier because you can see, okay, to close off this, I need to make it equal and opposite entry. Makes sense? But here, this is where you need to apply your mind. Let's go on. Step number 4. Now here it gets a little bit, just a little bit tricky. Because depending on whether you made a gross profit or a gross loss, that will change whether you're debiting or crediting the trading account. So we now need to quickly calculate to say, oh, did we make a profit, a gross profit or a gross loss? So we know that the sales was 462, and we know that the cost of sales was 100. 127. So immediately in your mind, you can tell we made a gross profit, right? Super, no problem. So then we say to ourselves, that means that our trading account, you can quickly do a T. So this is a trading account. And remember, the trading account is an income. Treat it like an income account. It's a temporary account. So we don't have it during the year, but we treat it like an income account, which means it increases on the credit side, decreases on the debit side. So we know that sales was over here, okay? And that was for the 462. I'm just going to put 462, okay? And then we know that the cost of sales was over here, and that was for 127, okay? And then we know, okay, cool. So in order to close off this account, which in other words, this total here, 462, must be the same as this one here, 462. We need to obviously then profit and loss, because it's getting closed off to the profit and loss for the difference, which is what we're doing over here. Here you're going to have your 334. Is it making sense? So we are debiting the trading account. Can you see we debited? Which means that we are crediting your profit and loss, which is what we have done here. Is it making sense? Are you guys with me? No, you guys are quiet. Okay, no problem. Thanks so much for holding. Is it fine? Are we happy? See, so if we have, ask your question before I go. Guys, ask. I don't mind being here until 1. If you want to go, it's no problem. But I know that I don't have an exam. Huh? It's my last time. She's not impressed. Okay. So I know that some things take what I'm saying, but then as you practice it, and you can remember what I was saying. Because now I'm kind of rushing for time. Of course, I don't mind sticking around. But ultimately, I think it will really, really make sense when you go through it yourself. The reason why I'm saying that is because when you get to this point, step number 4, which is where we are at, you're going to ask yourself, what do I do with the trading in order to close it off? Am I going to debit or am I going to credit? And this is when you now bring out the T account if you need to, all right? Just so that you can visually see. Okay, remember when I'm saying I'm closing off an account, we're bringing it to 0. In other words, the debit and the credit must be equal. Because remember we say we need to do it equal and opposite to close it off. So here we already have the 122. So we don't need to do an equal and opposite, but we need to do the difference. Does that make sense? Okay? So to do the difference, we know what is the difference. We know it is the 334. You guys will calculate that. You can even calculate within here. You can put in brackets 462 what minus the 127. And there you go. Does that make sense? Okay. I hope. Guys, trust me, practice this thing, guys. This is easy if you understand what's going on. Yes. I love the fact you asked this. I want to show you. So let's leave that 462 there, right? Now let's say our cost of sales was how much? 600,000. Can you see that our our debit side is greater? So in other words, we close this off. We now remember whatever the case may be, both sides need to be equal, right? So then we now profit and loss on this side. 138. Thank you, sir. And then we'll have 600 here. Does that make sense? So if we're crediting the trading account, that means we're debiting the profit and loss. Remember, the profit and loss is we also treat it like an income account. There we go. Right. We also treat it like an income account. So it increases here and decreases here. So if we're saying so can you see here, double entry, we credited here, so here we're going to debit. So can you see? It's negatively affecting our profit and loss. Okay? So that's how you determine whether you're debiting or crediting your trading account. Okay, let me go on. Okay, we're finishing. They only asked us to do the general journal, so this is literally it. So that was step number 4, closing off the trading account to the profit and loss. Now we're closing off the nominal account section. Okay? So here you can see these are all your expenses. And we know expenses, in order to close them off, we need to credit. Expenses, to close them off, we need to credit. Okay, and there we go. All of those amounts we have credited. And then obviously that means we're debiting the profit and loss account, which is what you see with they just added all of them and did it once with the 94,000. Then finally, after we've closed off the nominal account section, we are now closing off the profit and loss to the capital account. And again, over here, you need to ask yourself, did we make a profit or a loss with the profit and loss account? How do we do that? Okay, so here I forgot to do the rent income was the only income. To close off income, you have to debit it because the whole year we've been crediting. Remember, incomes increase on the credit side. Okay, just want to explain that off quickly. So here, let's see, 14,000. Okay, we just want to do rough figures because I want to let you guys go. It's been a long day. I know you guys are tired. We know we made a profit. What was the profit? We calculated it here up top, the 334. So 334 over here plus 14,000. Okay. And then let's see, what were our expenses? 94. Okay, so we obviously made what? A profit. Because can you see our expenses are less than our income that we generated. So again, here we'll have capital. Okay, for whatever the difference is. Okay, here it would be what? About 348. 348. Okay. So that means in the capital T account, we are crediting. Can you see that? And here it will be profit and loss. This is the capital account. Capital increases on which side, guys? Credit side, and decreases on the debit side. And there, can you see? So we credited capital, you can see that there. And obviously we debited, as we did over here, we debited the profit and loss. Then your last step, step number 7, which you mentioned for us, sir, was to close off drawings to the capital account. Drawings, we know, increases on the debit side. So we're closing it off now, so we're crediting it, which is what we've done over there. And capital is decreasing. Drawings have a negative effect on capital. And there you go. Then you're almost dry. Okay. If you were doing the post-closing trial balance, you would then have a new balance on your capital. Because remember, drawings would be here. I see your hand. I'll be with you now. And you would have had your opening balance, opening for capital. Okay. So you would obviously now have a new capital balance. Okay. And there you would do carried down and brought down. Okay, and then you use your new capital balance in the post-closing trial balance. You have a question? Okay. Okay. All right, cool. So here's what I'll do. Let me just close this. Okay. So maybe, okay, let me deal with whatever question you have here. But I want to release people who need to go, who would like to go. Is that fine? Are you guys fine?
Yeah.
Because I don't want to hold you. We said 9 to 12. Okay, cool. Let's go for this question first. Yes. The word. You would need to get the word like let's say trading account here, it would need to be debited. Then you get your mark for the weighting. Does it make sense? So you can't just give me trading account, but you credit it. Then you don't get anything. That is why you need to show me your workings, because then I can see, okay, no, she actually calculated the wrong thing, but she was collecting from the right item. So maybe somewhere along in your calculations you made a mistake. Does that make sense? So I can give you method now to say, no, she understands the principle. She just got the amounts wrong. Okay. Right. So that is that. Okay, you want me to go back to where? Question 4. It, okay. Accounting equation. Guys, where's my register for with the emails and all that? Uh-oh. I want to send you a link for the playlist. The playlist for all of my revision for this module.
Did you put it in? You put it in. You put it in.
Oh, okay. Let me step off for everything. Okay.
Yeah, there we go.
This is the one, right? This is the question. This is the. Uh-huh. Question 5. 2022, yeah? Yes. No. I can give you an overall. So remember, when it comes to the individual debtors, it's the same thing. We just need to know what happened to this individual debtor as a result of them buying more inventory with us or buying more stock with us. Is their account going to increase? If their account is going to increase, as you can see over here, that means that we are debiting. And that means that the balance is going to increase. If, let's say, you see there on the 5th, there's a credit note. That means that they either returned goods, or they requested a rebate, or we have overcharged them. Okay? So, that is obviously going to happen in the debtors allowance journal. And now we're going to credit, because that means that their account, what they owe us, is now decreasing. Does that make sense? Cool. Then when we receive money, right, we're going to have a cash receipt. And that's why we said receipt there. And that's obviously going to affect your cash receipts journal. And that's obviously going to decrease what they owe. Because if I owe you and I pay you, whether it's by check, EFT, or actual hard cash, whatever I owe you is going to decrease. So that's what's happening here. And then now we have a new balance that I owe you. Does that make sense? Yeah, one line, one line. Yes. So here you're going to add. If it's in this column, you're going to add to the balance. If it's in this column, you're going to deduct or minus from the balance. For one? Yes? Yes. So that's what they owed us on the first day of the month. Yes, they bought more goods. Read the transaction. Oh, yeah, okay. Ah, this is a brilliant question. Now I can see how many marks was it? Ah, okay. Wow. This would have made more sense to have the 40 marks here. So you guys, you need to understand your journals. You need to understand your journals in order to answer this question. If you don't know your journals, sorry, you're losing 25 marks here. Your cash receipts journal or your cash book receipts. If I have a debtor and I'm including my debtors in there, if you look here, I actually wrote cash receipts means what type of journal is that? What's happening there? We're receiving money. So if I'm receiving money, right, it means that those who owe me are paying me off. Okay? So here, what you need to do, when you have a question like this, you need to say, okay, which one am I dealing with first? Which debt am I dealing with first? You pick this, then you say, okay, cool. Then you have to do it in order of the date. Because remember, we are operating in order of the dates. Does that make sense? So, when looking at this, the first transaction we have is in the debtors journal. Okay, but you can see there at the bottom they gave us the opening balance. So we start there. After reading the question, we start there to say, what is our opening balance for this? 8,000. We plug it in. Then we go and we say debtors journal was the first transaction that we had with this. This is now during the course of the month. So we record that. What is happening? If it's in the debtors journal, what has happened? For us to record something in the debtors journal, what has happened? Ashton, what happens when we record something in the debtors journal? Why? Why are we recording in the debtors journal?
You sold things on credit.
We sold something on credit to somebody. Does that make sense? So if we've sold to Miss, because isn't we've written the name of who we're transacting with. So if we sold to Miss on credit, that means what's happening to her individual account. She now owes more. Does that make sense? Which is why we're debiting. Okay. What's the next transaction with this? It's now in the debtors allowance journal. Why would we record something in the debtors allowance journal? She's returned something, it's a rebate, okay? We overcharged. So here there's no context. But you have to understand the journal in order to answer the question. Now you see what I was going on about. Cool. So here you just write credit note, then you say, okay, DAJ, and then can you see? If it's in the DAJ, it's obviously reducing because she's in the return, requesting a rebate, or we overcharge. Is it making sense now? And hence why the balance is now decreasing. Then in receipts, now we come to the last transaction with this. Again, like I said, we are receiving cash from her, which is why in the bank we see 30,000. And then we're saying, where did we get it from? We're getting it from our debtors. That's also going to reduce what she owes. And boom. Thank you for asking that. I didn't look at this. Well, I looked at it when I was revising, but obviously, when we're going through the answers, so now you see the different ways that they can ask. And this is a brilliant question. Why? They're testing your knowledge on how well do you understand posting from the journals to the ledgers. That's your question 5.
So, will it ever be that credit is a plus?
That?
Credit's a plus.
Yes. But in the individual creditors. Yes. Okay. So let me go there. So on the 20th, what's happening there? What's happening there? And if you look at the additional information, it also says 10% settlement discount was granted, all right, to T stores on 20 May 2021. Okay. So now if you go to the general journal and you see sales of the debit side, you see input value, and then you see debtors control on the credit. What does that tell you? And if you look even under the narration, it says settlement discount granted. So what's happening here? Guys, what's happening? Settlement discount granted. The information is there. Yes, we need to calculate, but what's happening? I want us to just understand what's happening first. Of is it taken out of what? No, I don't. You are going too far. You're beyond where I'm at. I want us to start with understanding the. If we understand the transaction, then it will be easy for us to actually do it. Does that make sense? So what's happening, guys? Yes. And there's a set of 10% discount, and we record it where? Settlement discounts. Where do we record them? In the general journal. So what's happening there in the general journal? We're recording a settlement discount granted. If it's granted, it's to who? Somebody that owed us. In other words, aha! Now we know what's going on. So what's happening on the 20th? If we also look there on our cash receipts, there's an amount that we receive from this data. Remember what I told you, whenever you have settlement discount, two things are happening at the same time. There's somebody who's paying you less than what they owed you, right? Because they're sending their account. And the difference is the discount. Does it make sense? So, in your cash receipts journal, that is the 32,544. That is them paying us. So under receipts on the 20th, can you see cash receipts journal? And since they're paying us, that's decreasing what they owe us. Does that make sense? So that's why we credit it. So what is the balance now? The balance now is obviously the difference of what we gave them the settlement discount for. All right? Then we say, okay, we know that the difference is the settlement discount. So obviously, a journal voucher is a source document that arises as a result of the settlement discount granted, even a settlement discount received, but here we know it's granted, okay? So you can just plug that in. Since this is a settlement, you know that at the end of this transaction, this person owes us nothing. So we know that it needs to end in zero. So that's why I'm saying, you know this amount is the total discount. That's one way of calculating it. The other way you could have said, okay, what is the balance of what is due to us? Before the 20th, what was owed? 36,160. But if you look at the cash receipts, they only paid 32,000. That's what we received. But we know what they are settling their account. Does that make any sense? Are you happy? Are you happy? Are you happy? Are you happy? I don't care about that. No. Guys, I didn't realize, honestly, I didn't realize you're writing on Monday. I thought there was actually more time. I actually would have even said, guys, if you want to consult, send me an email. So, yeah, this is literally the last time I'm seeing you guys. So I'm going to say it here now. Thank you for coming.